Hello, I'm Mark Dunn, editor of Portfolio Institutional, an investment magazine for pension schemes, insurers and charitable foundations. And I'm going to be the host of this discussion, which looks at impact investing or earning a return on your capital while making a positive social or environmental impact. This is a market worth more than $700 billion globally, and that's based on data that was released in 2020. So it's probably a little outdated by now. To understand exactly what is going on with this market, we've put together a panel to find out. And I think, I'm sure you agree, they're quite an interesting bunch. So shall we start with introductions? I'm going to start at the top of my screen here, which is Oliver.
Good morning. Thanks for the opportunity to speak today. So my name is Oliver MacArthur. I work for Aon on the equity manager research team, also the impact research lead. I joined Aon in 2018 from the Church Commissioners, and since I've joined, I've been helping the firm grow its capabilities in sustainable impact equity on the active side, factor elements, and index as well. So I've been involved in a lot of projects, both in terms of internal initiatives and new solutions for clients. So it's a brief background for me.
Great, thank you, Oliver. And Aaron. Can't hear you, Aaron.
Yeah, sorry, just clicking the mute button too many times. Sorry, my name's Aaron Pinnock. I work for the Church Commissioners for England before Ollie left. The Church Commissioners for England are the £9 billion endowment fund of the Church of England, and I focus on impact investment there in their responsible investment team.
Thank you, Aaron. Anna.
Hi, good morning, everyone. I'm Anna Rodgard, and I am a colleague of Oliver's at Aon. I'm in the fixed income manager research team, so my responsibilities include leading research on ESG and impact strategies within fixed income. So we've done a lot of work in terms of building out our buy list recently of eligible strategies, and starting to think about what kinds of further solutions we can provide to clients in this area.
Thank you, Anna. Melanie.
Hi, Melanie Cusack. I'm a professional trustee with PTL Governance Limited. Rather than being someone who advises on all this, I'm one of the end users of a lot of the advice that Aon gives. And this is a topic I'm quite interested in because we've done a lot of compliance work around all the SRI stuff that we had to do last year, but actually rather than just doing it, let's make a difference with it. So this is an area that's quite close to my heart, and I'm trying to get my trustee boards to the same level of interest. Okay, and I understand you're calling us from Australia, Melanie. So yes, I got stuck here.
Yeah, good to have you with us anyway.
Thank you.
And Bella.
Hi, I'm Bella Landymore. I'm the Policy Director at the Impact Investing Institute, and we're set up to grow the size and the effectiveness of the impact investing market in the UK and internationally through education, research, awareness raising, and policy and advocacy activities.
Thank you. Naomi.
Hello, I'm Naomi Lestrange. I'm Managing Director of 2020 Trustees. So like Melanie, I'm a professional trustee. And we're busy doing a lot of work within 2020, trying to influence our consultants, to influence the managers to do more around impact, in particular on climate change and biodiversity. But this is an area of great interest to me.
Good, thank you. And last but no means least, Tim.
Thanks, Mark. Morning, everyone. My name's Tim Manuel. I'm also at Aon, where I head up what we do on responsible investment. So I think where Anna and Oliver can bring a bit more perspective around what managers are doing and the development of solutions in that area. I suppose I spend a lot of my time out talking to lots of our trustee clients about what their concerns are, what their objectives are, what they'd like to see more of. And so looking forward to bringing that perspective to the discussion.
Well, thank you, Tim. And I'm sure you'll agree that this is quite a diverse panel of people from across the impact investing spectrum. Thank you for that. Melanie, could we start with you? You did say there that this impact investing is something that's close to your heart, and you're speaking to many of the schemes that you work on to to just join you and see your point of view. I'm going to take it there that this is not universally popular across some of your schemes as a strategy.
No, I think there's a mixed reaction, and dare I say it might be a generational thing, but I think there's still a fair bit of history around to do something good with your money will mean compromising the level of returns you get. And I think we've got to overcome that sort of misnomer. It's been proven that's not the case, but there's still a lot of people who believe that, and they argue that the sponsors won't be interested because the sponsors won't want to give up returns, and it's sort of a bit of a lame argument now. So it's a slow process. I think the compliance work we had to do helped because people had to start thinking about it and talking about it sensibly, but I feel like it's still the active impact, the active addressing hasn't happened yet as much as it should have done.
Gotcha. Okay, thank you, Melanie. Naomi, what about you? Are your schemes investing to make an impact?
It's a similar sort of picture to Melanie, really. In terms of specific active impact investments, I think that's still perceived as quite difficult, and I do think we need more help from consultants on that to bring the right funds to boards. But I think nonetheless, across the board, we're trying to look at the impact of our investments and to monitor that more explicitly. And there are a number of changes going on across our portfolio, but I think there's a lot more to do.
Thank you, Naomi. Aaron, how can investors make an impact with their capital? What are we talking about here? What are they doing?
Yeah, so Naomi touched on it, I guess, just then, is looking at the kind of impacts across the portfolio as well as making individual kind of commitments to impact funds. We see impact investment as a continuation of our responsible investment process. So it's not a carve out of funds to the side, but it's a portfolio-wide approach and lens with which we look at our portfolio and do further due diligence on our portfolio to try and increase the general impact of that. So in direct holdings that we have, we're trying to make them go carbon neutral. We're trying to biodiversity was mentioned. We're trying to increase the kind of the net biodiversity gain on some of the areas where we can. And then on the mandate side, making new mandates where we can. We're always looking for impact or ESG kind of aligned investments, and just making the capital to them as much. But it's as much as a kind of advocacy or engagement approach with our companies and managers as much as it is trying to find new investments.
Gotcha. Okay, thank you, Aaron. Oliver, how are your clients making an impact with their capital?
Well, I think I defer to Tim more broadly on terms of the client-facing point. So perhaps we just comment it from a manager selection piece. So we're kind of helping clients with potential solutions they can deploy. So we've built out a list of strategies. It does run the continuum from kind of typical ESG strategy to impacts with a public equity context. So that's what we're doing from a solutions angle. From our kind of own personal influence, we've in discussions with managers, we share what we've seen in other managers, obviously sensitively, about one manager's using a particular framework that we think is very valuable and high integrity. Perhaps you should think about doing that in your portfolio as well. So there's one element around researching, allowing clients to have the tools, but then also using our position as a gatekeeper to try and share best practice where we see it, and then show our work in how we're thinking about impact as well. So perhaps Tim might furnish a bit more details on the client side, but that's just where we're coming from the equity research perspective.
Okay. And Tim, over to you. I mean, is there a lot of interest among your clients for impact investing?
Yeah, there is interest. I mean, I think what I'd say is there is no one size fits all in terms of having this conversation with trustee boards. Like Melanie suggested, and this is my own experience, that I walk into lots of different trustee rooms and are faced with a whole spectrum of positions and counter arguments on this, and so there is no one size fits all. I think it is important to go through a process though on it, which looks a bit like the same process we went through when we were starting those first conversations a few years ago about responsible investment, where education is really important at the outset, engaging with the right stakeholders, whether that's the trustees, the company, and other advisors or fund managers that the trustees are associated with, just to make sure that everyone's on the same page in terms of a level of understanding. And then it is important to think about objectives, what trustees are trying to achieve, and get that properly articulated so that good decisions can be made down the line based on a foundation of good understanding of the issue at large and a good understanding of what the trustees are trying to achieve.
Gotcha. Thank you, Tim. Bella, I saw you nodding along there. And what sort of trends are you seeing emerging in the impact space?
I mean, trends. The trend we're seeing is a huge amount of interest, but like people have picked up today, a lot of misunderstanding, a lot of not knowing what you can do next. So we've, as an institute, we've set up to be helpful, to grow the market in whichever way we think is appropriate and most helpful to the stakeholders. And so across the piece, from trustees to consultants to fund managers, and to pick up on a few things people have said. I mean, Melanie mentioned the misunderstanding that impact investing involves sacrificing a financial return. That's a sort of myth, if you like, that we set out to bust, along with the associated idea that impact investing is not compatible with the trustees' fiduciary duties. So we've sort of tried to tackle that at different stages. We've tackled the fiduciary duties issue by doing some legal analysis with city law firms and sort of ratified by the Association of Pension Lawyers to say, no, it is compatible with fiduciary duties, and this is how, if you're taking a finance first perspective. And then to pick up on what Tim said, how to put it into the context of the decisions trustees have to make normally with any investment decision. So what does it mean to set impact objectives? What does it mean to measure, monitor and report on your impact and your financial returns? What sort of criteria you're going to use for your investment consultants and your fund managers, and how are you going to execute on your stewardship and engagement duties and activities, and taking an impact lens, to use Aaron's words, to all of those standard governance procedures, if you like. And we've published them in a set of principles, which a number of people around the table actually contributed to. So thank you. They're written by and for the pensions industry. And they're out there for people to use and adopt. So that's some of the trends and some of the issues we're seeing and the ways in which we're trying to tackle them.
Thank you, Billy. You've actually raised quite a few issues there, which we'll hope to get through one by one as we move along. Actually, that point there you made about return. Aaron, in your experience, does making an impact, it might make you feel good about the positive impact you're making on society or the environment, but does it hit you in the wallet?
I mean, we've seen no difference between the performance of our broader impacts or ESG positive investments as to our regular investments.
Yes.
One example I'll give is forestry. All of our forests, all of our harvest is sustainably certified. So we classify them as impact investments because they're sustainably certified. They contribute, the forests themselves, to sequestering carbon and also to a more circular economy. And I think that especially over the last 18 months, people or investors have realised the carbon benefit or the future benefits of the environmental kind of story that forests can bring. And forestry assets have really performed really well in the last, for decade really, but especially in the last 18 months. So that's one example where they've done really well. But then also if we're focusing on the kind of renewable story or the impact private equity, private debt story, they're pretty much aligned broadly with what our existing funds have performed alongside with. But that's because we do thorough due diligence on all of our funds. We don't just go into impact blindly. We have the same due diligence process on our impact funds as we do for any of our other funds.
Gotcha. Thank you. Melanie, when you're speaking to guys on the board and you're trying to interest them, maybe take a more impact approach, and they say, yeah, but we've got to make a return here. How do you prove to them that actually doesn't mean sacrificing return?
I think that's where we turn to consultants to provide that sort of background and information. But I think it goes kind of to what Aaron was saying. You don't just go after a fund because it says it's impact investing. It's part of the analysis that you go through when selecting a manager to deliver your strategy. So it's almost that hasn't changed, that process hasn't changed. It's just there's other factors that are considered. And when you put it in that context, it goes what Tabella said about, you're looking at your financial metrics and the risks attached to it. So you're doing that anyway. It's just you can then extend it a little bit and say, and what sort of impact do they make as well? So one might trump the other because they are more impactful than the other. And I think that's the only way of doing it, because past is never a good guide to the future and all those sorts of things anyway. I have referred some trustee boards to various papers that have been written, and I remember there was something done by I think it was one of the universities, Warwick University, I think a few years back, and there's various papers around there if people just don't believe their consultants. But I think it's not just that. They also say, well, we're too small. We don't do direct investments. So how can we possibly make an impact? It's all up to the manager. And that goes back to, well, you've got to do appropriate due diligence of the manager anyway. And then the other, I heard this quote, and I can't remember where, but I think it's brilliant, especially with this sort of area, is don't let perfection get in the way of progress. Just one small step can make a huge difference in terms of getting some impact, rather than saying our whole portfolio all at once has to be the best ever, most impactful portfolio we can achieve. You'll never get there. So just start somewhere is my view with the trustee boards.
Thank you, Melanie. And Naomi, is this what you're experiencing?
Yes, I think there are lots of trustees who are quite risk averse, and there are quite a lot of investment consultants who are risk averse as well. So we still see that box ticking approach quite a lot. And what I aim to do more generally is flip it round and say, you have this pool of assets, whatever size it is.
Yeah.
How exciting is it? The opportunity that you have to make a difference with that cash that you've got. And so everything we do is around trying to turn that round. So trying to leverage as much as we can, my personal influence, the influence of the funds that 2020 has, but also there's been a bit of a vicious circle around everyone being scared to move first. And it's trying to flip that around to encourage everyone to see what a fantastic opportunity this is to do more and help secure the planet that, all our members, children and grandchildren are going to be living on.
Gotcha.
If I may, Mark, may I just add to that?
Yes.
I think one of the problems is, as I think it might have been Naomi who said earlier as well, where you don't have a lot of assets, having the funds available to do it and not being one of the first investors, because a lot of people don't want to be the one who takes a risk on the fund and finds that actually it flops. So that's quite difficult, but it's not an excuse. It's just a recognition that that's the world we're operating in at the moment, and it will only get better, I think.
Good. Thank you, Melanie.
Exactly. So
Anna,
that's the reason why we're trying to challenge the consultants, to challenge the fund managers effectively to look at the whole of their portfolio. So not just where they're advising us, but on everything they do, to say, are you monitoring your impact? Are you monitoring your carbon footprint? Which will then encourage them to be pushing the fund managers to have those right funds, and also to be putting them in front of the clients.
Gotcha. Okay, thanks, Naomi. I'm going to come to you in a minute, Anna, but before that, Tim, are you as a consultant, are you challenging the fund managers about what's in their portfolio?
Well, I think Anna is the person to ask this question to, rather than defer to me. But I would say we are across the board. There's lots of fund managers that we work with, probably hundreds, if not thousands, and so that it's a process. But it's certainly something we're doing a lot more of these days. But I'll let Anna talk some more.
Okay, thank you. Anna, coming to you, your fixed income is a big part of institutional portfolios. How can investors make an impact on that side of their portfolios? Is it just about equities?
No, not at all. I mean, I think what's great about fixed income is, in the way that it's different to equities, is there are so many, innovative new product strategies coming to market. I mean, the most obvious one to talk about in the impact discussion is obviously green bonds, that's a huge growing part of the market, but that's obviously widening out now. We've got social bonds, blue bonds, and also most recently sustainability linked bonds, and these offer a huge opportunity for investors, especially if you're a fixed income investor looking to make an impact. They are some great instruments that can be used as part of your portfolio to demonstrate that you have an impact in terms of your investments. So
so the opportunities are there for people who want to. Okay, going back to what we've already heard, I mean, are you challenging asset managers on this side of the portfolio and making sure there's enough there for people to enough opportunity there for people?
Absolutely. I mean, I think it's definitely grown at a slower pace compared to equities, let's say, but in the sense of we're always looking for new impact funds across the whole of the fixed income universe. I think the idea that it should only be relevant to a certain sub-asset class of fixed income is, I saw a presentation the other day that said that asset-backed securities, for example, are ESG friendly. Why not then? If they're ESG friendly, then you can certainly construct your own impact portfolio from them. So it really is the idea that, impact investing, as Aaron said, is a sort of a lens, a philosophy, a way of thinking. And once you have that, you've adopted that approach, then the investments that you can make from that point are I think, very varied.
Gotcha. Okay, thank you, Anna. This is an open question for anyone at Aon. If there's anyone typing loose ends in, just tell me exactly how else Aon is helping their clients in this area. Is there anything we haven't touched on yet?
One thing that I thought might be helpful to share is, we work with a number of schemes and clients that are really quite well progressed in this space, and I thought it might be interesting to sort of share some of the perspective of those clients who've gone a long way on it. So I think that there's one client in particular that has influenced me a lot in the way that I think about this. I think they're really, and so they are probably the longest term investor we work with. Right, the investor with the longest time horizon. For example, all of their equity mandates have absolute benchmarks and 10-year investment cycles. So that they think about this in a very long-term way. And I think what that means is, and sorry, just going back to that conversation about sacrificing returns, for them, it's the other way around. The way that they will deliver the return objectives they need is by investing in impactful investments, because those are the investments that will be most successful over the long term. So for them, the conversation is completely flipped. Right. And I think that for me, that's just, it is a mindset thing. I think that was mentioned earlier. I think the other aspect they have, and this, Anna touched on this a little bit, is now I know there's lots of work going on in the background around frameworks, and Bella's done some great work along this. There is some complexity there, and there is some fragmentation because you have different parties working on different things. This group sort of put all that to one side to a degree and just work from an assumption that impact can be achieved everywhere. Right. They don't have the answer, but that's not their job. Their job is to ask the challenging questions, right? So they assume it can be achieved everywhere. And so, and what they've achieved is, building it into their public equity mandates, across their private market mandates, even, I mean, this might sound slightly ridiculous, but they've got some synthetic exposures and they've challenged those managers to try and achieve it too. So I'm not saying it can be done, but the point is they asked the challenging questions and left it to others to come up with the answers. And so I really like how they approach it. And I think it's influenced a lot of the way I think about it. But actually, I think there is this core foundation to those mindsets they have, which were based on the fact that they are, as most pension schemes should be, genuinely a long-term investor.
Gotcha. Great. Thanks for that, Tim. Thank you. Bella also said that this actually does fit in with the fiduciary duty mandates. Is she right? Is this all part of fiduciary duty? Should be excluded? Could anyone like to come in on that one?
I can touch on that. Sorry,
Thank
Bella.
you, Aaron.
So I think the way that you can, or at least I think about impact investments, is that they're addressing the systemic issues that we face, not just as investors, but just globally. And and probably climate change is the easiest one for people to get their heads around and to point to. And this is where the TCFD is really useful coming in, because if you're forced to do scenario analysis of your portfolio of your company in varying global temperature and varying world global temperatures, then the most frequent analysis is that 4 degrees, 3 degrees plus is poor for everyone. So by investing into climate solutions investments, you're not just investing into funds or investments that can potentially do well themselves, but to Tim's point that they can actually increase in value over and above other funds, they're actually reducing the systemic risk of your whole portfolio, because the entire portfolio benefits from a lower temperature world. And if you yourselves are investing into that lower temperature world, then you're actually reducing the entire risk bucket of the entire portfolio if you're taking that long-term horizon. So I think that's probably the best way to look at impact investments. You're addressing the systemic risk that your portfolio is prone to over the long term.
Thank you, Aaron. Thank you very much.
Can I just say, Mark,
yeah,
I'm really glad that the conversation actually has. I mean, when I said we've done work to demonstrate the compatibility of impact investing and fiduciary duty, it was for this very point. It was to say this is about long-term investing. This is about a more resilient portfolio. This is about delivering long-term benefits to your members. It's not about wanting to do good in the world. That's not the job of a pension scheme. The pension scheme is there to deliver benefits to members. And I love that Tim sort of brought that up and made that point, and Aaron's built on it. And this idea of a transitional mindset, that if we're looking at really long-term investments, if we're looking at the outcomes for members who are going to retire in 40 years' time, what kind of world is it going to look like? What kind of investments would have really sort of stood that test of time? And it's the sort of investments that we've picked up on. So yeah, it's not that asset class. It's not about doing good. It's about taking a lens to your investments over the long term and seeing what's going to perform best.
Can I add one more perspective on that as well? One of my colleagues said, well, the whole point about looking at all this is, what's the point of having a pension being payable to you if you can't actually spend it or use it because the world's gone? So it's taking it right down to the member level, not just the having the funds to do it. So it was sort of an interesting, I suppose that's another way of looking at it as well. Long term, looking out for your members, making sure they've got something that they can use. There's sort of no argument against doing this, really, whichever way you look at it. But it's just taking time, and pandemics don't help in terms of keeping the focus on it.
Well, that's actually a point you raised there, because the pandemic essentially is a healthcare crisis, isn't it? I mean, Bella, how is what we've seen around the world, because it seems to touch all areas of the world, nowhere seems to have escaped. How's that changed attitudes towards sort of more responsible investing, but also making more of an impact? Because we are talking here about the social fallout as well in terms of mental health.
Yeah, I think it's interesting what you say, Melanie. I can see how the pressures on pension schemes are just immense at the moment, from all rafts of regulation as well as all other pressures. But we have seen record inflows this last year into ESG portfolios, and impact has really taken centre stage as well. And I think you hinted at it, Mark, but it's not just been the climate crisis on people's agendas. It's now been as a result of the pandemic. It's the health crisis. It's mental health. It's all other health. It's social factors. It's the S in ESG has really come to the fore, and also the links between climate change and, well, the E and the S in the ESG. So this idea that to an extent climate change has caused, and biodiversity loss is one of the factors that causes pandemics, and seeing the interrelation between those two and the fact that we cannot address one without taking account of the other. So that's been, I think, for want of a better word, a positive trend this year in terms of raising that awareness and really getting a focus now amongst regulators and investors on the range of issues that need to be addressed.
Okay, interesting one there. Aaron, is this? I take it that you were quite pro this anyway, and the pandemic hasn't actually changed your opinion, but has it sort of hardened your resolve, would you say? Is it maybe proved you right in some ways that you do need to make more of a social and environmental impact?
Yeah, I think being a faith-based investor, social is, or we have focused on the social probably a little bit more than some other investors, but nevertheless, environment has been our kind of number one engagement and ESG topic. But certainly on the social side, I think the diversity coming out of not only just the pandemic and the effect that it's had on ethnic minorities and people on in certain areas of society, as well as the George Floyd thing, that's brought diversity and inclusion to the front of our minds. So we're doing a lot of work on that at the moment. And then also the frontline work, the key workers debate has been really interesting, and we're trying to look at ways in which we, as investors into big tech companies with artificial intelligence, units, arguably kind of potentially risking key workers in the future, how we as investors can influence that, that dynamic. So I think there are two interesting social areas that we've seen and trying to use our voice for.
Great. Oliver, in your research, are you seeing any sort of changes in strategy or in this area?
Maybe just on that the broader point around the pandemic. So I'd echo those points around seeing greater acceleration in this space. And I think on the environmental side, you're seeing more companies clamoring to commit to net zero. I hope that's here to stay. And certainly more companies are talking about it. And last year, like Bella mentioned, part of the pandemic, we saw better environmental outcomes. So carbon emissions were down, and I believe it was in the range around 6 to 7% last year in terms of reduction. But say if you want to hit those net zero targets by 2030, there's going to have to be a substantial, even greater reduction, which is just a scary thought considering how the world changed so much last year. So that's on the environmental side. And then on the social side, you saw COVID exacerbating already inequalities in society. So people who can work from home, dial into virtual conferences, maybe doing a little bit better than if you're a key worker who are kind of regularly exposed to risks around the virus. And then internationally, you're seeing difference between the vaccines and those countries that don't have the vaccine. So I think you're seeing the need for impact investing increasing. And then from my own experience, how that marries with my experience at Aon, I do believe that clients are now making more of an effort and a move in this area. So certainly within that last year, a lot of that discussion has been translated a little bit more into, okay, let's make a move. There's still, I would say, divergence across the client base, but pockets of action and acceleration is happening. So that's probably my take on the broader macro point. But happy to come in later on trends around strategies as well.
Okay.
If I may, Mark, I just wonder if it wasn't for the pandemic, we would have had more progress. I think that's because business has carried on throughout, as Oliver said, a lot of people have carried on working and we've been fine. And we had the compliance issues to get the education piece that Tim referred to. We started that years ago. But I do wonder if we would have been further ahead because people were able to focus on this rather than all the other issues as well. So it's not that we haven't made progress. I just think maybe it hasn't gone quite as far as it could have done.
Okay. You decided to pursue an impact investing strategy, but Aaron, perhaps we could talk to you. What are some of the barriers here? Actually, okay, with the wills there, we've got the funds. Actually, making these investments, are they easy to find? There's a lot of competition for them. What sort of problems have you guys had to climb over?
So I'd say first of all, even though we are a faith-based investor, we have a fiduciary mandate. So we are a market rate return investor. We're not looking for kind of impact first capital, as it's sometimes called. And so there is a high bar in which to choose our managers, and just the nature of impact investing, it being a fairly new and nascent area, the investments that come to us don't often have the track record that we typically require from other of our investments. So there's a track record issue. The areas in which they're investing are sometimes unproven. So that comes to that track record point. The strategy is different, and so those are really the main issues that we face. Is in trying to get comfortable around the strategy and the team that are involved in an impact investment compared to our regular investments. And sometimes that we can get comfort from that. For example, if it's a team we already know that are very good on ESG and are thinking about creating an impact, an impact fund or an impact kind of transition of their fund, or if it's a team that has just done really, really well over the last 10 years and have been one of the kind of diamonds that have performed well in the impact space. But to be frank, for us as institutional investors seeking kind of fairly high returns in the private equity, private debt, infrastructure space, there is still a lack of product, but we expect that to come over time.
Okay, and thank you. Bella, in your research, what are you finding out in terms of barriers for actually making these investments?
I mean, we've explored some of them, which we think are behavioural largely.
Yeah.
And Aaron mentions the sort of lack of track record, perceived lack of product. I think there's an issue amongst pension schemes because of fiduciary duties, because of the size, and because of all the other constraints. No one wants to be the first mover. And so it's about finding track record, or either for that strategy or for that manager, or for that asset class, as well. So, we've done research into the UK social housing market. What does it look like as a whole in terms of its risk return characteristics? And I think it's the first time that it's been done, and therefore sort of demonstrating as an asset class, this is something that's it's a viable investment for institutional investors with fiduciary duties, and so trying to take that sort of asset class approach to demonstrate track record of that asset class where you can't necessarily find it in an individual strategy or for a fund manager, and then finding examples where pension schemes have gone before, so that again people don't feel like the first mover. So in the UK, unfortunately, it's harder to find those examples, so we've had to look globally, but we've got some really good examples of very large institutional investors who have made pioneering and successful investments into impact, and then taking those and providing really robust case studies around those examples, and then taking them around pension schemes to demonstrate what's possible.
Good. Thank you, Bella. Anna, is this just a long-term strategy? I mean, is it possible to make an impact over the short term?
Yeah, I think if we, if you go from the starting point of, again, it's a lens, an approach, a viewpoint that you are starting with, then absolutely you can make an impact in the short term. I mean, we've seen green bonds that have been issued with a 1 year, duration. It's yes, okay, so it's probably a longer term. It's perhaps like longer term horizon is more aligned to a longer term investment view, but over a short term it's absolutely possible. I think the coronavirus is also another example of where there have been opportunities for impact investors to have a huge impact, just based on the opportunities that have arisen as a result of it. So it's, you need to have a nimble investment strategy at the same time in order to address those short-term needs. And yes, you might want to have a longer-term view, but it's absolutely possible in the short term. I think perhaps where there might be a struggle is in my space, where I look at sort of, the pooled investment vehicles. There's probably not as many options that I'm seeing that are being, that are coming to market in terms of a short-term impact bond option, but that's not to say that they're not, there's a conversations that we have with managers. They're definitely areas that we're pushing for new products to come to the market.
Thank you, Anna.
Mark?
Yes, John.
I just wanted to add a bit to what Bella said earlier, because I think it's really good. I was going to share, so Pension for Purpose published something, in the last year, which was a collection of different polls that were done around impact investing about 2 years ago. And there was a number of different responses. And what came out top from these polls a couple of years ago was, and this was around barriers to impact investing, it was lack of understanding and lack of consultant recommendation. Like clear top, everything else was kind of irrelevant. So we reran that poll recently. Yeah.
Okay.
And what came out top this time was concerns about lack of opportunities and concern about sacrificing return. So clear winners. So I think for me, it represented the fact that the market's moved on a bit. Right. First of all, for me, what that means is the education strategy needs to change, if you like. And I think what Bella said about showcasing or highlighting schemes who have done it and done it successfully is critical to that. I think what's interesting though is some of the different schemes we've worked with who I think have done it successfully are the ones who either haven't done it for or don't want the publicity around it. And in some ways that's enabled them to go about it in a way without worrying about what might come back to them when they put their head above the parapet in terms of what they've done. So I think, I don't know what the answer to this is necessarily, but it'd be great if we could find a way of encouraging those that have done it but who maybe don't want the publicity to contribute to some of the stories and the showcasing and the naming and faming that will help others realize that actually this whole concept of first mover is a myth that needs busting, because lots of people have done it now, lots of investors have done it, pension funds have done it and have done it successfully, and that's not something that needs to be a concern. You already mentioned that the start mark, the size of this market of 700 billion, there's no such thing as being a first mover in a market that big, right? So I think education strategy needs to change, and much more focused on case studies, on how it's been done successfully, to try and address those new barriers that I think have been identified.
Naomi, is Tim right there about? Sorry, Naomi, is Tim right there about the education side of things?
Yes, he absolutely is, and I think a lot of the focus around engagement, I'm always a bit hesitant about, because in my experience, if you consult with members, you get relatively little response, and what you get is quite extreme in both directions. So, there's lots of members who actively don't want to do this because they're subject to these myths around returns, etc. But I would be interesting to talk a bit about DC, because I was reflecting on what's happened in the last couple of years, and like Melanie, I'm more disappointed, particularly in terms of government position. There's been a huge amount of government support, and there was a huge opportunity to attach some requirements around that could have had a huge impact, and that opportunity has been very much lost. However, the recent announcement about infrastructure or consultation on infrastructure, I think gives it a huge opportunity, because infrastructure is a great area where you can actually have a fantastic impact, deliver great returns, and also it's a really good engagement tool as well. And I think because younger members tend to be more interested in this as a topic, and master trusts are gaining funds at a really rapid rate, there's a fantastic opportunity to tie all these pieces together to get some of these case story wins and to improve impact, and then you can expand the fund range at less risk alongside for the DB schemes. So I always try and come back to the positive, because I think there's huge opportunities. We just need to, I guess, all lobby in every direction, support each other to achieve here.
Thank you, Naomi. Melanie, did you see this as a lost opportunity for DC? Because we just heard there about what it could mean for things like infrastructure.
Well, I think there is a risk of focusing on DB and trustees trying to talk about the strategy for DB without recognising the importance of DC. And I mean, everything Naomi said, I totally agree with, except when it comes to member engagement in DC. I think if a member says, can I please have a fund that does this, why can't the trustees set it up? Usually it's not that difficult. It can be self-select, and it makes everybody feel good, because the members they've been listened to. There may be other members who are interested in it, and I feel that's that's something we should be doing as a matter of course. DB engagement, a little bit more challenging. Although I had an I heard a case study of someone, they had done something that was using plastic, recycling plastic to make furniture, affordable furniture. And that organization put one of these chairs, it's actually an Aon example, put one of the chairs in the foyer of their building and said, this is what your pension scheme is doing. It's recycling plastic to do this sort of thing. And everybody felt good. You know, it's a very tangible evidence of doing something worthwhile with the investments. I think more of that would be fantastic, where you can, rather than being this nebulous, the pension scheme trustees do something to make sure my money's there, actually showing that they're behaving appropriately as well with that responsibility would be quite good. So it might be lost temporarily, I think, is the answer to your question, Mark.
Well, thank you, Mel. Bella, did you want to come in?
It was really just to pick up on what Tim was saying and that call to action. And Aon's obviously doing great stuff in this space, but there is an issue with, or at least when you speak to the different parts of the chain, the trustees, the consultants, the fund managers, it's all finger pointing. It's no one's fault, it's always the other's fault. And I think we put a lot of pressure on the trustees who are under a lot of different pressures already. And I guess this is a call to action for the other investment consultants out there. You know, there is an onus on them to search out that product, to bring this idea to the trustees, to educate the trustees, to make the trustees excited and to help the trustees trust that this is a strategy worth pursuing. And we're just not getting that level of proactiveness from amongst consultants, from what I can tell. So yeah, that would just be my call to action for consultants.
Sorry, Mark, if I could, I did a webinar where it was there was about, I don't know how many professional trustees on it, and it was meant to be talking about not so much impact investing, but certainly SRI. And the theme of it was, well, we haven't got the tools to do it. Everyone was complaining about not having the tools to do it, but no one was actually saying, well, how do we get the tools to do it? And it was a little bit disappointing, to be honest, because I felt there was it was that finger pointing that Bella talked about, and everyone justifying their inaction because other people hadn't provided them with something to do it. And I think that's moved on since then, but it was a really disappointing group in terms of, it's not my fault. I haven't got the tools, so I can't do it.
If you want my one ask of trustees, right, and it was partly to my point earlier, which is don't feel like you need to have the answer, but it helps me bring together what is needed to find the answer if you ask me the challenging question, and if you keep challenging me until I bring you that answer. Because like trustees who have many different, things going on and sort of dynamics in there, so do we, right? But the more we are asked a question, the more I can, corral resources and expertise to try and find those answers. So I want those challenging questions to keep coming. But that is the role of the trustee, I would say.
Tim, that's exactly what we're trying to do. So we're just about to issue a document to pretty much all the consultants who advise us, saying, right, each year we're going to ask you these following questions, and we're going to keep asking you, expect continuous improvement. And the reason we're doing that is because we know there's fantastic individuals at most of the consultants who are trying really hard. And when the working group came together, it was great to see, but I already knew most of those individuals because they are the ones doing the hard yards, and it is trying to get everybody together to support those, to enable you guys to bring your colleagues along faster.
There you go. So to brace yourself, Tim, it's coming.
Good.
Gotcha.
Thank you.
Melanie mentioned there, she gave the example of the chair, the recycled plastic chair, and everyone felt good because this is where your pension money is going, which is all very good. We've also heard during this discussion that pension schemes in particular are there to earn a return to fund retirements. What kind of returns? Can you give me some kind of idea what kind of returns you can expect to make from an impact strategy? Is there any consensus on that?
To be honest, I think you can go from minus 100% to plus whatever you know,
Okay.
whatever you want, because I think this is the difficulty with impact investing is you do a philanthropy on one side, but that's philanthropy.
Yeah.
You can have impact first capital looking at really catalytic kind of how can we solve, you know, really problems and usher in the more institutional investors, and they may expect to get a small, you know, may expect to find a small loss on their capital. But then I think that you've got this extra bit, which is now, you know, becoming the big thing, which is where institutional investors are getting in. And I think you can, depending on the strategy that you pick, you can find investment funds and investment returns that are entirely aligned with normal with other fund investments or other investments, and maybe even a bit more, as we've discussed. But to say that an impact strategy is likely to return X, I don't think is you've just got such a long chain. It's similar to asking kind of, you know, what can a technology investment make? Well, it can make nothing, or it can make an awful lot. It's kind of, I see it as the same question.
Yeah.
We've sort of moved on from the DC discussion. We said it was important to talk about, but then, I mean, we thought we should sort our own house out first.
Okay.
So the Aon DC plan. So Anna, Oliver, and I are members of this plan, and that there's an element of that plan that focuses on impact investing.
Mm-hmm.
So it was put in first as a self-select option and was one of the most actively selected. It now features as part of the default strategy.
Okay.
I think because there are, you know, constraints connected with what DC plans can really invest in, it focuses on public equity markets because that's part of that's easier to achieve within those constraints. But and you know, now it's got more than 100 million, I think, invested in that part of the strategy through that DC plan and connected DC plans. I think what affected me to some extent was actually when we did this and communicated it out, and you know, we started to get loads of emails from people around the business talking about, you know, how important this was to them, how pleased we'd seen them, how pleased they were to see that this had happened. And that kind of overall, the sort of general sense, that general reaction was a sense of pride, if you like, in what their money was doing. But of all those emails and kind of communications we got, there was not one person who said, "I wish you hadn't done this." Yeah, there was absolutely nothing negative, and all positive in terms of doing it. And so, yeah, I really just don't see the from a DC point of view, why this isn't possible, and why this isn't the right thing to do for all sorts of different reasons.
Yeah, it's interesting. I mean, Anna's talked there about the amount of different type of bonds that are available. We've heard about the opportunity in things like infrastructure, and you just mentioned there about why they shouldn't be done. But when it comes to public assets, private assets, how do those approaches vary? Is there any difference? I mean, I suppose this is an answer, a question probably for Anna and Oliver. I mean, how do they vary?
Yeah, I guess it's it comes down to that sort of, you know, the difference between a direct investment versus investing in a pooled investment fund.
Yeah.
There is an argument, obviously, that you get more influence, more control through the direct approach. But having said that, you know, to make it an opportunity that's available for all sizes and for all investment levels, then you need pooled fund options available as well that people can access, because it does. Not everyone has the ability or you know, possibility of being able to invest to in a direct fashion. But I think the overall sort of the approach is the same, right? It's the same ideas that underpin how you're making the investments, but it is just in terms of that the closeness and the control that you get within the actual investment opportunity.
Thank you, Anna. Oliver, is there any word?
Just elaborated on what Anna said. So fully agree with those points around influence and control you get in private markets. Aaron's talked earlier about those investment opportunities that the church commissioners have done, and with private assets clearly have a greater potential for kind of deeper impact, a more targeted approach that aligns closely with
stakeholder mission. You can perhaps clearly see how your money is influencing an outcome, how it changes, how sometimes it's called additionality in the literature. But that's the private market approach. But I would say from a public markets approach, that's becoming increasingly part of the conversation. So some might say it could be democratizing impact investing from that very institutional background, very endowment-led background, perhaps where its heritage was, to a more mainstream offering. So from a public equity context, we've tried to think about it in two ways. So the first way investors can deliver impact is through using the equity finance to support solution-led companies that are offering solutions to environmental and social challenges. So sometimes it's really clear in the story, like a renewable energy company or a healthcare company delivering vaccines, or a company delivering new forms of kind of vegetarian orientated meat, for example. So you're seeing how the world is changing, can be changed in a better way to deliver better environmental and social outcomes. So that's one lens on the solution side. And then also using the tools of active ownership to encourage change at the company. So whether that's making the business mix more sustainable, or changing business practices to make them more aligned with stakeholder interests, more aligned with, say, natural capital accounting, for example. So yeah, obviously the private market heritage is very important, shouldn't ignore that. But I think public markets increasingly have had a role to play. Previously, I would say impact investors have looked perhaps down upon public equities in the impact conversation. I think that's changed in the last couple of years, and hope that continues, because I think all asset classes have a role to play in the broader conversation.
Gotcha. Thank you, Oliver. Thank you. Let's move on to measuring. I mean, how do you measure impact? Aaron, actually, I think this one's for you. I mean, how are you measuring the impact, the success, the performance of these investments that they've done exactly what you hope they would do? I mean, is the data easily accessible?
I think for the best examples of where of our managers that do focus on impact investment is they get the information of just a few simple KPIs, maybe even just one KPI of what they want to focus on within their investment portfolio companies, baseline it, and then see how their either new capital invested into the company or their active ownership efforts increase that, and then typically look at that single or two KPIs over the course of that investment. And I think that is, at the moment, probably the best, simplest way to do it. It's not perfect, it will never be perfect, but I think that is the best way to approach it at the moment, because it's not too much of an effort for either the fund manager or the portfolio company to collect that information. It gives you at least a proxy to look at it, and it's easily digestible by the ultimate investor, i.e. an asset owner. So I think that's probably the best, easiest way to look at an impact, to look at your impact at the institutional level. If you're looking, deeper impacts, then maybe you want to look a bit more. But then, so I think that's the best way if you're looking at an impact approach. If you're taking this kind of impact lens, as we were discussing, kind of in addition to your responsible investment approach, then it's much more difficult, because you don't get the information on all investments for impact, and that's where I think it becomes a bit more difficult. But at the moment, what we are trying to do is look at kind of our alignment to impact through revenue or investment in certain themes, and that's where taxonomies like the EU taxonomy can help, or where fund managers reporting against like the SFDR or other things can help. And then it's just about trying to increase that percentage of your portfolio that is that total. And at the moment, I think that's the most practical and best way to do it, personally.
Okay, thank you. Bella, from your research and the people you've spoken to, I mean, how do you think the best way of going about measuring impact is?
I mean, like Aaron says, there isn't a one-size-fits-all at the moment. There isn't a best example. There isn't standardization. There is rapidly it's a rapidly evolving area. And so we are seeing, like Aaron says, the EU taxonomy, the sustainable finance disclosure regulation. At a global level, we're seeing increasing convergence amongst some of the big names that people will know, like the TCFD, SASB, GRI, etc. Until then, to pick up on something Melanie said right at the beginning, let perfect not be the enemy of the good. Just you just need to do what you can. And there are a million options out there. And I think Tim said as well, I think it was Tim, that, you know, to an extent, every fund manager is going to do it differently. And so long as they're doing something, it's better than nothing. And I guess it's just the issue of the consultant and the end investor is translating that information into something that's comparable and understandable. And that's the problem at the moment, that the onus often lies on that end investor to make sense of all that information. So I really like what Aaron said about demanding some simplicity from fund managers. I guess the only caution there would be picking one impact KPI risks ignoring some of the negative impacts a portfolio might be having. And so just as an end investor, asking those really difficult questions, again, like Tim says, of the fund manager, even if you're only being given one KPI, asking the questions about potential negative impacts, asking the questions about what sort of frameworks they're using and how they're developing those frameworks and how they can improve the information that they're providing you, just to keep the momentum behind improvement going. But there's a huge range of options out there, and until there's any standardization, I think the advice would just be pick one.
Thanks. Tim, when you're talking to clients, are they showing concern over, you know, is this measurable? How am I going to go about this? Is this one of their concerns?
To a degree, I think what I'd add to this is what sort of question: what is the point of measurement? Right? And for me, there's kind of 2 points to it. One is to support decision making. Yeah, and really, and you might expect me to say this, but there is no shortcut to due diligence. Right? I think Oliver and Anna could sort of attest to sort of just what real due diligence means. So I think all these measurement frameworks help add, kind of bring more information and new lenses into the kind of whole mosaic of information that goes into a due diligence process. So I think so these measurement frameworks are important for that decision making. I think the other point of measurement is around engagement and communication. And I think that's where some of the measurement frameworks, I think, still, well, can only solve part of the problem, let's say, or part of the challenge. Because I think what we found is the way stakeholders like members perhaps get engaged through those communications is not necessarily from the stats, but much more from the stories. And so I think there is a trade-off to be considered in terms of the statistics and the measurements that might give you a whole of portfolio view but are a bit abstract, versus the kind of case studies and stories that bring the situation much more to life. But obviously in those stories there's always a challenge around kind of cherry picking and what have you. So it's important for, you know, trustees to sort of choose the case studies they want to show rather than let those case studies be dropped on them by the managers, where it's always easy to find kind of one good story in any portfolio, isn't it?
Okay, gotcha.
I think so. Just on the point of measurement, I think when people hide behind or say that measurement is the major issue, it's a bit more, it's a stalling tactic, to be perfectly honest. If your portfolio is invested into non-impact funds, but you choose not to invest into an impact fund because you're not sure that they can demonstrate impact, well, the likelihood is that the impact fund is probably going to be better, if not the same, as a standard traditional fund. So, you know, take the plunge, really.
Just echoing what Aaron Bella was saying earlier. So echo those points around our lack of standardization, proliferation of frameworks, and you can definitely see the parallels with the debate, say 5 years ago, on ESG data, where everyone was suspicious of it, very exotic, and now they become more comfortable over time. And I think we're seeing a little bit of good kind of incremental efforts coming out from mainstream data providers on impact. There's lots of innovation happening in kind of startups, so maybe we'll see a shakeout in due course with kind of more kind of key providers come forward that you see in the ESG data space. That might happen over the next kind of 2 or 3 years. And I guess picking up on Tim's point earlier, I think there's a trade-off little bit between complexity and accessibility. So definitely professionals can get lost in a zoo of acronyms which are only intelligible to people who kind of live and breathe this stuff. And I think that sometimes that perhaps leaves people out. So actually, some might view it with suspicion, but I really like some of the efforts that market participants have done. I think Bailey Gifford, UBP have done really well on this point about bringing in kind of impact calculators as part of the story. So obviously got to have a health warning with that. There's going to be lots of assumptions in play. But it's a really good way to kind of visualize this and make that connection between what your money that you have and how it's actually affecting kind of change in the world and bring it to life a little bit more. So yeah, that's a tool for the consultants, is about both being able to navigate this zoo of acronyms, but also try and translate it into kind of actionable ideas that people can take forward.
Thank you, Oliver. Thank you. I think we're coming to the end now. So just in summary, really, in summarising what we've just heard. Naomi, are trustee attitudes towards this market, are they evolving? Are they improving?
Yes, they definitely are, and I'd say particularly over the last 18 months. And some of that has been driven by the compliance requirements. Yeah. I think some of that has been driven by changes in the world. Funnily enough, my evolution has been a bit similar to what Tim described. So a couple of years ago, I was already very passionate about it, but I was quite concerned about having the answers before I was vocal. And then I realised that it was my job to ask the difficult questions. And I've been doing that of my boards. And what's really nice is that sort of a year on from me giving them all grillings, they're coming back to me with thoughts and ideas. So, it is really powerful, just starting these conversations and reinforcing these conversations. Occasionally you're still brought up short by people saying, oh, won't the market fix it, and that kind of thing. And that, I'd still get some disappointing responses from consultants and things like that. But I think if we all jump on board, there is some momentum here that we can really make a difference.
Thank you, Naomi. And Melanie, what about you? Are you winning the battle with everyone else around the board about implementing these strategies, do you think?
I don't think it's quite a battle, but I do think there's still some convincing to be done. But I think it is heading in the right direction. I think people are not averse to having the conversation, whereas a few years ago, I think they would have been. I think they recognise this is a direction of travel that they need to get familiar with and comfortable with, and they don't poo-poo the consultants proposing some consideration of these sorts of things as well. Whereas I think a few years ago, it'd be, why do I have to think about this? So I think it's going the right direction. There's still work to be done, but I'm optimistic that it will move quickly and appropriately.
Gotcha. Thank you. And Tim, how is impact investing evolving? Is it changing? Because this is, as we talked to now, this is quite a young market, and it's not as established as some. So how's it evolving?
Well, I would say it's not as young as you make it out for a start. So it's more established, and as we've talked about, part of the challenge is getting that message out, that by doing this you are not putting yourself out on a limb, that this is something that's well established and to some extent, fundamental potentially to the delivery of that fiduciary duty that you have. I think that the evolution of the market, how might we see the market develop from here?
Yeah,
I think is an interesting question. Let me come at it a slightly different way. What do we need to happen so that the market does evolve from where it is today?
Yes.
And I think that is help the message. The way that we need to do that is to help the message perpetuate through the market from the top. So trustees make it clear what they want through their consultants, disperse that through the fund managers so that the understanding is more clear that this is a non-negotiable. Yeah,
Okay.
this is an absolute need to have, and it's for all of the participants in the market to come together to try and resolve it. But the more that we can demonstrate the kind of strength and solidarity of that view from the ultimate decision makers and beneficiaries, I think the more hope we'll have to make that happen.
Okay, Tim, thank you for that. Does anybody?
May I
Yeah,
comment on that one if that's all right?
of course.
Probably just 3 points to supplement what Tim was saying there. So one was on the kind of data point that we'll see kind of more sophisticated data that will come in over time. I think you'll see a shakeout in some of the frameworks, so seeing some consolidation signs already. So I think that will continue and that will be beneficial. And then last point is just around investors increasingly using the lens of impact across their entire portfolio and then using that as a basis for decision making. So you'd say investors traditionally have been optimizing only for kind of risk and return, whether that will change into a kind of like almost a triangle of decision making where you risk, return, impact, and then you're dialing and dialing down over the cycle subject to your kind of investment needs and preferences. So just wanted to elaborate on Tim's point there.
Thank you, Oliver. And as a final point, does anybody want to add to what we've heard from Tim and Oliver about how this market is evolving and changing? Looks like you guys set it up. Okay, guys. Someone to come in?
I was just going to say, I love the level of enthusiasm and the proactivity, if that's a word, amongst people here, and it just goes to show the information is there, the activity is there. I hate to say it, but it's just a lot of excuses that we come up against all the time, and we've highlighted all those excuses today, all those myths. So yeah, don't be afraid to seek out the people that are doing it, and the information is available, and the precedent is there. Yeah, and the business opportunity is the key thing.
Okay, guys, we've heard some great views that we've heard there. Thank you very much. Also, I'd like to thank, and of course, our sponsor for making this possible. And I'm sure we'll be catching up and discussing this again in the future. So, thank you, guys.
Thanks for your time.
Thank you.
Thank you.
Thank you.